We have a new guest on Connected Farmer to talk about the bearish USDA report. His name is Terry Reilly, and he has 25 years of experience in the business. Right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So, Terry, welcome to the channel. It's good to have you here to bring your perspective. And we're going to jump right in on the numbers of the USDA that I think the market has reacted on, especially on that 70 billion bushels of corn crop.
Well, thank you for having me. I mean, this was bearish for most of the markets and for the CME products. U.S. corn production was probably the largest surprise that the trade saw. Initial reaction was the fund selling a little bit more than 50,000 contracts on Monday, following the report that came out at 11 a.m. CT. But in general, we're also surprised to see the soybean production also inch a little bit higher. And then, as far as the ending stocks go, all three categories, wheat, corn, and soybeans, were all up. The 17 billion bushels is a record, with the yield basically coming in a half a bushel above above the December-November estimate, but and also exceeding trade expectations by 2.5 bushels. In addition, the area was upward revised 1.3 million acres, and I'm not sure much of the trade saw that coming. So we have a lot of corn to that's being set on right now in December 1 stocks, basically showing that on-farm stocks were a record, up 13.5% year over year. And then off-farm was up 3.9%. Total corn December 1 stocks up 10%. Just shows you that a lot of producers were reserve sellers, more so than I expected during the fall quarter. So going forward, there's a lot of questions surrounding demand for the next 3 quarters to work through. In particular, when you look at the corn balance sheet, with USDA raising the feed and residual by 100 million bushels, that might be a little bit questionable. It's 6.2 billion. That's a lot of corn to be fed out there, and it's competing with wheat. Wheat for feed did come down about 20 million bushels, but one doesn't offset the other, especially with the number of animal units that are being counted up currently. USDA made some other changes in the U.S. corn balance sheet by taking the food use down 10 million bushels. They left exports unchanged. That might be still a little bit on the high side, but the inspections are running at a very high level, and with 61% up from the previous year as of to date from September 1st. But in general, the corn balance sheet is very heavy at 2.2 billion bushels. And with the stocks use ratio of 13.6%, that is very comfortable. And I expect prices to kind of grind lower going forward, maybe down to the 410 level when you look at the March contract, which isn't too far away. In the December contract, anywhere from 435 to 440. Looking at the bean balance sheet for the U.S., I found that the harvested area was up a little bit. That was a little bit surprising. Both corn and soybeans, there was a little bit of perception that the harvested area would actually be a little bit lower. But production was only up 9 million bushels. USDA did take the crush up 15 million, which heavily impacted the U.S. Soybean meal production, which was upward revised 522,000 short tons. The exports were taken down for beans by 60 million bushels. In my opinion, that could actually be a little bit softer. What USDA has penciled in for 1.7575 billion, just because it's not that necessarily that we're fulfilling the Chinese um, buying of upwards to 12 million tons. We're almost at that mark. But it's actually the shipments that are a little bit concerning. When you look at the soybean inspections since September 1st, they're only running at 17.9 million tons. That's down from 31.3 million tons a year ago, with shipments at China lagging greatly by 2.14 million tons versus 17.1. So there's a little bit of question marks surrounding the export number, in my opinion, for the U.S. Balance sheet. As far as the products go, USDA did lower the U.S. soybean oil production by 210 million pounds, but did raise ending stocks by 26 million pounds. What they took biofuel down 700 million pounds, which I thought was a pretty aggressive, given all the fundamentals surrounding the bean oil market, especially with biofuel demand and also the upcoming decisions and getting all the spokes in the wheel to get a clearer picture of the U.S. biofuel policy coming up here over the next month or two, which I'm a little bit bullish on. And I think the trade is a little bit bullish as well. When it comes to the U.S. soybean oil balance sheet, especially over meal, we saw a good amount of spreading in that market recently. And there's other factors going on, like higher sunflower oil prices out of the Black Sea, maybe moving to B50 in Indonesia by the second half of 2026. Malaysian palm oil production being projected to be down year over year for the calendar year of 2026. In addition to higher usage of palm oil, and then you have these 25% potential tariffs coming on selected countries that do business with Iran, which may actually further cut tallow imports from Brazil. So bean oil is got probably one of the most interesting stories there for the upside. The other markets, I expect prices to pretty much grind lower. I wouldn't rule out soybeans for March to trade down to the 10-20 area. And then as far as wheat, it's starting to stabilize a little bit. $5 is a pretty good level for March Chicago wheat. We did see KC wheat lose a little bit of steam, and that's because when USDA made adjustments by class, they actually took the Kansas City type wheat ending stocks higher. Overall stocks for all wheat was up 25 million bushels. They took feed and residuals, I mentioned, down 20. And then outside the U.S., things didn't look very bullish at all either.
Yeah,
There were
I was going to ask you if you think the only factor that can flip this market right now is South America, if there is a smaller crop down there.
right. Well, when you look at beans, I still think USDA at what is it, 178 million tons. I think that's still on the low side. We're hearing the trade is at 180 or a little bit higher, and I heard a whisper number of 190, which I can't wrap my arms around that number particularly just yet. But we do have a little bit of nut drying in parts of BA Argentina. That could still impact the crop a little bit. I know that USDA left at unchanged 48 and a half. Looking at the corn side, I think the wild card is moving into the second corn crop for Brazil. And there is a little bit of long-term weather models for the month of February that are turning a little bit drier for southern Brazil and parts of Argentina, which also affects the late planted crops. Brazil, getting back to beans, Brazil is in its early stages of harvesting, so there's a way to go. But right now, we're staring down very large crops at this point. But keep an eye on Brazil's second corn crop and then the final numbers for beans, obviously. And then as far as world wheat goes, I mean, world wheat stocks were revised higher, most notably in Argentina, where they took production up 3.5 million tons to 27 and a half. That's a large number. And then USDA took Russia up 2 million tons to 89 and a half. So there's not much of a bullish story in wheat, especially when you got some of these tariffs hanging over the U.S. market at this point.
Yes, yeah, I think these tariffs they might impact the supply of corn, especially to Iran.
That's correct. So there's a lot of unknown with that recent headline that was basically stamped today by the administration, and there's a lot of countries that do business with Iran. So we're looking at soybeans. You know, the relationship of soybeans for China, as I mentioned, tallow with Brazil, corn with South America. It's really just, I mean, as far as exports go out of the U.S., is this really all going to be dependent on shifting the chairs around the table?
Yes, and what else are you looking at for the next days over the week?
Well, over the week, obviously, weather is the trade's getting shifting back to trading a little bit of weather. Um, the relationship, one thing that a lot of the focus is kind of been is in addition to digesting these numbers, and I think the numbers are finally fully um, worked into the market after today's close. But in my opinion, we're going to have to keep an eye on the soybean corn relationship for new crop. It did shoot up from 2.31 to 2.37 on report day. But in order to buy some of these acres back for beans, I think we're going to have to get up to 2.4 to 2.45. So spring plantings are going to be in focus, even though they're months away. But in addition to the weather, and La Nina continues to dissipate out there. El Nino is not expected to develop until third or the fourth quarter of 2026. So what that tells me, we're not really looking, or I'm not looking for a major weather event or any disruptions in the northern hemisphere spring plantings coming up. But once again, we're pretty far away from that. But over the next several weeks, I think prices will tend to grind lower, for the exception of wheat, which is trying to find support at the moment.
All right, thank you so much, Terry. Let's touch base again next time.
All right, thank you.